Welcome to your deep dive into the Indian equity market.
Sounds exciting.
We're going to unpack this India Ownership Tracker report together, focusing on those trends I know you're most interested in.
Okay, great.
It's like a snapshot of who owns what in NSE-listed companies, but it was taken right before this major event in October
Oh.
that the report doesn't even cover.
So we're looking at the calm before the storm.
Right. It's like we're putting a puzzle together with a missing piece.
Uh-huh. I like that analogy.
But let's start with what we do know.
Okay.
What were the big ownership trends leading up to that event in October?
So one of the most striking trends
Yeah?
is that promoter ownership in those NSE-listed companies, it dipped to 51.1%.
Okay.
First decline in 6 quarters, driven mainly by a drop in government ownership,
Okay.
which we'll get into more later.
Right.
But interestingly, private promoters
Yeah.
seem to be picking up some of the slack.
Huh.
Their ownership actually increased.
So it's a bit of a changing the guard.
Yeah, you could say that.
The government stepping back and private players are stepping in.
Yep.
What about the other major players?
Wow.
Like the foreign portfolio investors
Mhm.
and the domestic mutual funds?
Yeah.
What were they up to?
So FPIs saw a slight bump in ownership,
Oh, okay.
reaching 17.7%.
That's interesting.
Now, you might think that's surprising,
Why is that?
given all the foreign capital flowing into India at the time.
Oh, right. Yeah.
But remember that financial stocks underperform compared to the broader market,
Mm-hmm.
and FPIs tend to have a good chunk of their investments in that sector.
So even with all that foreign money coming in,
Right.
the performance of specific sectors can really sway those ownership numbers.
Exactly.
Okay, that makes sense.
Yeah.
Now tell me about DMFs.
Sure.
They've been on quite a roll, haven't they?
Absolutely.
Yeah.
DMFs hit a record high ownership share of 9.5%. And it's all thanks to those retail investors participating in the market through mutual funds,
Interesting.
especially through systematic investment plans.
Those SIPs everyone's always talking about.
Exactly.
So this surge in DMFs, fueled by those SIPs,
Yeah.
tells us something about you, the Indian investor.
Like what?
You're becoming more disciplined, more focused on the long game.
That's true.
And that's a powerful shift.
Absolutely.
Yeah.
We are seeing a change in investor behavior,
Uh-huh.
a move toward those strategic long-term approaches.
Mm-hmm.
And the numbers reflect that average monthly SIP inflows reached a huge
Wow.
RS 23,796 crore.
Seriously.
Yeah.
In the second quarter of FY25.
That's right.
Wow. Okay, so we've got government ownership declining, private promoters picking up the slack,
Right.
FPIs cautiously increasing,
Yeah.
DMFs hitting record highs.
Yes.
Where do individual investors fit into all this?
Good question.
They haven't exactly been sitting on the sidelines, have they?
Not at all.
Okay, good.
When you combine their holdings as promoters, direct non-promoter investors, and their indirect investments through mutual funds,
Yeah.
individual investors now hold almost a quarter of India's market capitalization.
Really?
Yeah.
What's that in terms of percentage?
That's 24.5%. A significant increase from just a few years ago.
That's amazing.
Yeah.
Individual investors becoming a force to be reckoned with.
They are.
It wasn't always like this, though, was it?
Definitely not.
No.
Individual investors used to hold a much smaller portion of the market.
So this really highlights a major shift.
Yes.
They're becoming increasingly active and influential players
Directly.
in the Indian equity market.
That's right.
It's exciting to see that power dynamic evolving.
It is.
Now let's talk about the government shrinking role.
Okay.
This decline in government ownership.
Mm-hmm.
The report mentions that being part of a larger trend. That started way back in 2010.
Yep.
What's driving that long-term trend?
Primarily, it's due to disinvestment policies. The government has been strategically divesting from publicly owned companies since 2010,
Okay.
aiming to increase public participation and boost economic development.
So this recent dip was especially steep.
It
How
was
much steep are we talking?
a 96 basis point drop
Wow.
in the September quarter,
Okay.
bringing government ownership down to 10.5%.
That is a steep drop.
Yeah.
Was there anything specific
Uh-huh.
that contributed to such a sudden acceleration in the decline?
The report suggests the underperformance of PSU banks compared to the broader market.
Interesting.
Yeah,
Okay, so it's not just a matter of deliberate policy, but market forces are also at play here.
exactly.
Now, knowing your interest in privatization trends, this is something you might want to keep a close eye on.
Definitely.
It could create some interesting opportunities.
For sure.
Wouldn't you say?
Oh, yeah.
Yeah.
This decline in government ownership
Mm-hmm.
raises some interesting questions about the future of PSUs. Will this trend continue? How will this impact market dynamics going forward? There's a lot to unpack there.
Absolutely. And speaking of market dynamics,
Yes.
let's shift our focus to the unstoppable rise of DMFs.
Okay.
We talked about those SIPs earlier,
Right.
but what's behind their sudden popularity?
Well, I think it reflects a growing understanding and appreciation for disciplined long-term investing among retail investors.
That makes sense.
Yeah, instead of trying to time the market or chase those quick returns,
Right.
more and more individuals are choosing to invest smaller amounts
Uh-huh.
consistently over time,
Okay.
allowing the power of compounding to work its magic.
It's that classic advice.
Right.
Time in the market beats timing the market.
Exactly.
But this constant flow of money through SIPs
Mm-hmm.
must have a ripple effect,
Oh, yeah.
not just on DMF ownership,
Right.
but on the market as a whole.
Absolutely.
What are your thoughts on that?
So this consistent inflow of funds acts like a stabilizer,
Okay.
helping to reduce volatility in the market. It's almost like a built-in shock absorber,
I like that.
cushioning the impact of those short-term fluctuations.
So that can be incredibly valuable,
It can.
especially in uncertain times.
For sure.
Okay, so we've got government ownership trending down,
Right.
DMFs and SIPs on the rise. Now it's time to talk about those foreign portfolio investors.
Right.
They were showing a slight increase in ownership,
Yes.
but we know there's that big October surprise lurking in the shadows.
Yeah, that's right.
Let's take a closer look at their activity
Okay.
before that dramatic event.
Right. So before the October drama unfolded,
Mm-hmm.
FPI ownership had actually been on a downward trend for a while,
Huh.
dipping below 18% in FY24
Okay.
for the first time in over a decade.
What was causing that pullback?
Well, it seems to be a combination of factors.
Like what?
Global uncertainty, rising inflation,
Mm-hmm.
tightening monetary policies by central banks all around the world.
So even with India's strong fundamentals, those external forces can make FPIs a bit skittish.
Exactly.
Okay, so we're dying to know about that October FPI sell-off,
Of course.
but we'll save that reveal for later.
All right, sounds good.
Consider it a little cliffhanger to keep you hooked.
I like it.
Yeah.
Markets are constantly evolving.
Yeah.
What appears to be a stable trend can change abruptly.
Exactly, and that's precisely why we do these deep dives.
To stay ahead of the curve
Right.
and understand the underlying forces shaping the market.
Speaking of which,
Yeah.
let's examine some of those sector-specific trends
Okay.
before that October shakeup.
All right.
The report highlights some intriguing shifts
Uh-huh.
in both DMF and FPI preferences.
What were they?
Well, both DMFs and FPIs were pulling back from financial stocks,
Interesting.
but their alternative choices were telling.
Okay.
DMS were shifting towards consumer discretionary,
Oh.
IT, and
Oh.
healthcare sectors,
Got it.
while FPIs increased their exposure to consumption-oriented sectors and IT. That's fascinating.
It is.
What do these choices tell us about investor sentiment?
I think it points to a growing confidence in India's consumption story.
Oh, so?
DMFs being more attuned to domestic trends
Huh?
seem particularly bullish on the consumer discretionary sector,
Okay.
which includes things like automobiles, durable goods,
Mm-hmm.
and leisure activities.
Okay.
This suggests a belief in rising disposable incomes
Yeah.
and a willingness to spend among those Indian consumers.
So basically, they're betting on the Indian middle class flexing its economic muscle.
You got it.
That makes sense.
Yeah.
But what about FPIs?
What about them?
They're also focusing on those consumption-oriented sectors.
Right.
What's their perspective?
I think it reflects a global view of India's growth potential.
Okay.
They're seeing this large
Mm-hmm.
and increasingly affluent consumer base
Yeah.
and recognizing the opportunity that presents for companies catering to those needs.
So it's interesting to see both domestic and international investors recognizing the potential of the Indian consumer.
Absolutely.
What about the increased exposure to IT for both DMFs and FPIs?
Uh-huh.
Is that a sign of continued confidence in that sector?
Oh, yeah, absolutely.
Okay.
Despite some recent headwinds,
Mm-hmm.
India's IT sector remains a global powerhouse and a key driver of growth,
Okay.
attracting significant investment.
Makes sense.
Yeah.
It seems like a safe bet given the IT sector's track record.
I'd say so.
Now, before we get to that dramatic October reveal,
Yeah.
I want to circle back to something we touched on earlier.
Right.
This growing importance of individual investors.
Right.
It's a theme that keeps popping up.
It is.
Their combined ownership in the Indian market is approaching a quarter of the total market capitalization.
It's a significant shift,
It is.
underscoring the fact that individual investors are no longer just passive participants. They're actively shaping the market.
They're not just riding the wave, they're influencing the tide.
I love that. That's a good one.
And the report highlights another interesting trend, a move towards diversification, both institutionally and individually,
Right.
away from the top decile company by market cap.
Interesting.
This growing interest in those mid and small cap companies signals a greater appetite for risk
Okay.
and a belief in the growth potential of these smaller players.
I see.
Investors are looking beyond the usual suspects, seeking out hidden gems with potentially higher returns.
That makes sense.
Yeah, so it's not just about the big names anymore.
Right.
And that's reflected in the falling HHI, that measure of market concentration.
Yes.
Essentially, it tells us that investor portfolios
Uh-huh.
are becoming more diverse and less concentrated in just a handful of companies.
Exactly.
This trend towards diversification is fascinating.
It is.
It makes me wonder if we're witnessing a fundamental shift
Yeah.
in how investors approach the market.
Definitely something to ponder.
Yeah. What are your initial impressions?
So much to unpack here.
I know,
The
right?
decline in government ownership, the rise of DMFs, shifting sector preferences,
Yep.
the growing influence of individual investors.
Right.
How do these trends connect?
Yeah.
And how might they shape the future of the Indian equity market?
Those are the million-dollar questions.
They are.
We'll delve into those very questions after a quick break.
Sounds good.
Stay tuned.
All right. Welcome back. You ready to uncover what happened in October?
Absolutely. Let's dive into that October surprise.
Right.
What went down with that FPI sell-off?
So it was substantial.
Okay.
FPIs pulled a net amount of 1.16 lakh crore rupees
Wow.
out of the NSE's capital market
Okay.
during October alone.
That's a staggering amount.
It was.
It sounds like a mass exodus.
Yeah.
What triggered such a dramatic exit?
Well, it seems to be a confluence of events.
Like what?
Weaker than expected corporate earnings
Mm-hmm.
definitely played a role,
Okay.
raising concerns about valuations. At the same time,
Yeah.
some investors started seeing more attractive opportunity
Okay.
in other markets,
Like where?
like China and Japan,
Interesting.
which appeared to be
Yeah.
more reasonably priced at the time.
So a bit of profit taking
Right.
and a dash of FOMO,
Yeah,
chasing perceived value elsewhere.
exactly.
That makes sense.
Mhm.
But the report mentions something interesting about the sell-off
Oh,
being concentrated in the top 100 companies.
right.
Can you elaborate on that?
Yeah, so while FPIs were pulling out of those large cap stocks, companies in the Nifty Small Cap 150
Okay.
and the Nifty Micro Cap 250
Mm-hmm.
actually saw net inflows during October.
That's a curious contrast.
It is.
While the big names were taking a hit,
Right.
smaller companies were attracting investment.
Yeah.
It seems to support that diversification trend we discussed earlier,
It does.
with investors venturing beyond the usual suspects.
Exactly.
So this October event adds a whole new layer of complexity to the ownership puzzle. We've got those longer-term trends, government ownership declining,
Yep.
DMFs rising,
Yes.
individual investors becoming more prominent,
Right.
and now this sudden FPI shift.
Did a lot to take in.
It is.
Yeah.
How do we make sense of this evolving landscape?
I think the narrative that connects all of these seemingly disparate pieces
Yeah.
is a story of transformation.
Okay.
The Indian equity market is undergoing a significant evolution,
Okay.
shifting away from its dependence
Yeah.
on government ownership.
Uh-huh.
And a handful of those large cap companies
Okay.
were witnessing a democratization of the market with individual investors and DMFs
Right.
playing increasingly influential roles.
So the market is becoming more inclusive,
Pace.
more representative of the broader Indian economy.
Exactly.
That's quite a compelling narrative.
I think so.
What does this transformation mean for the market's future?
Well, is it a sign of positive growth
Yes.
or potential instability? I think it signifies greater dynamism
Okay.
and potential for growth,
All right.
but also potentially greater volatility.
Okay.
As the market becomes more diverse,
Uh-huh.
more players enter the game,
Right.
and those external forces exert their influence.
Yeah.
we can anticipate a more complex and potentially thrilling ride.
It sounds like investors need to buckle up
I think so.
and prepare for an exciting journey.
I agree.
Now, that brings us back to you
Okay.
and your specific interests.
Right.
How do you see these trends influencing your own investment decisions or your company's strategy?
Good question.
What stands out to you as particularly relevant?
It definitely emphasizes the importance of staying informed,
Okay.
understanding not just the numbers,
Right.
but the forces driving those numbers.
It's not enough to just look at the data.
Right.
We need to understand the why behind the what.
I couldn't agree more.
Speaking of connecting the dots,
Yeah.
let's revisit the report and see if there are any other insights we haven't touched upon yet.
All right.
Here's one.
What is it?
It mentions that institutional ownership in NSE floating stock increased marginally, with DMFs hitting a new all-time high of 19.4%
Wow.
in the September quarter.
So this reinforces the point
Yeah.
about the expanding influence of DMFs in the market.
Right.
They're not just increasing their ownership in general,
Uh-huh.
but also in terms of their share of freely traded shares.
Interesting.
This gives them a stronger voice
Okay.
in corporate decisions and market trends.
It's as if their voting power is growing,
You could say that.
giving them more leverage and shaping the market's direction.
Right.
On the flip side,
Uh-huh.
the report highlights that FPI holding in that floating stock dipped to a 15.5-year low
Wow.
of 36.3%.
So this aligns with the trend we observed earlier,
Right.
with FPIs pulling back somewhat
Uh-huh.
before that October sell-off.
It's interesting to see this gradual dip over several quarters, indicating a more measured shift in sentiment
Yeah.
rather than just a knee-jerk reaction to a specific event.
Right.
It's almost like they were anticipating a change in the market dynamics.
It seems that way.
But here's something that caught my eye.
Oh.
The report delves into a decile-wise analysis
Okay.
of investor portfolios,
Yeah.
revealing a declining trend in both institutional and individual investments
Okay.
in the top decile companies
Right.
by market cap.
So this provides further evidence
Yeah.
of that diversification trend we've been discussing.
Sure.
Both institutional and individual investors are expanding their horizons, moving beyond the largest companies to explore opportunities in the mid and small cap space.
And remember the HHI, that measure of market concentration?
Yeah,
It's been declining as well.
it has.
It's a clear sign that the market is becoming less top-heavy,
Right.
more balanced. But the report makes an interesting observation.
What's that?
This trend is particularly pronounced
Okay.
among individual investors.
Interesting.
Yeah, it highlights that individual investors now only have 64.5% of their portfolio
Okay.
invested in the top decile companies.
Huh.
That's the lowest percentage since the beginning of their analysis in 2001.
Wow.
It's fascinating to see those individual investors leading the charge
It is.
in embracing diversification, seeking out those hidden gems among those smaller companies.
It's a testament to their growing sophistication
Absolutely.
and confidence
Yeah.
in navigating the market, making independent investment choices.
We've covered significant ground in this deep dive.
We have.
It's time to take a step back and reflect
I agree.
on what we've learned.
Let's synthesize these insights.
Right.
Explore what they reveal about the bigger picture.
And how these insights might enhance your understanding
Mm-hmm.
of the Indian equity market.
Good idea.
We'll be back shortly for our final analysis
Okay.
and some thought-provoking takeaways.
Sounds good.
All right, we are back for the final stretch of our deep dive
The final stretch.
into the Indian equity market.
Okay.
Time to connect all the dots and see what picture emerges.
Sounds good.
We've explored how those ownership patterns are shifting.
We have.
The government reducing its stake, DMFs gaining traction,
Right.
individual investors stepping into the spotlight, and FPIs making those strategic moves.
Yeah, it's like a complex dance.
It is.
Each player influencing the others.
But what does it all mean for you, our listener?
Good question.
What's the key takeaway from this exploration?
I think the Indian equity market is in a state of transition.
Okay.
It's becoming more diverse, more dynamic, and more globally integrated.
Yeah. And as with any transformation,
Right.
there are both opportunities and challenges.
Absolutely.
Opportunities for those who understand the evolving landscape and can adapt to the new reality,
Right.
and challenges for those who cling to outdated assumptions
Yeah.
or fail to recognize those shifting tides.
Exactly. The key is to stay informed.
Okay.
Understand the forces shaping the market.
Right.
And be prepared for a more intricate
Mm-hmm.
and potentially volatile ride.
It seems like the days of assuming that past performance guarantees future results are over.
Yeah, I think so.
Investors need to be nimble,
Mm-hmm.
adaptable,
Yes,
and always open to learning.
I agree with that.
And that's where deep dives like this prove invaluable.
They do.
They provide the knowledge, the insights, and the perspective needed to navigate this ever-evolving landscape.
It's like having a map and compass
Right.
to guide you through the uncharted waters of the Indian equity market.
I like that.
Uh-huh.
But before we wrap up,
I
there's
just-
one final point to consider.
Right.
The report we've been analyzing
Yes.
captures a snapshot of the market before that dramatic October sell-off by FPIs.
Right. That's an important point.
It is.
It raises the question, did this October event significantly alter the ownership landscape?
Did it accelerate those existing trends or introduce entirely new dynamics?
Did it shake things up enough to create a new playing field
Right?
with a different set of winners and losers?
Those are questions worth pondering.
They are.
How might this event have impacted government ownership,
Mm-hmm.
DMF holdings, and crucially, the behavior of individual investors?
How might these shifts, in turn, influence the trajectory of the Indian equity market going forward?
These are complex questions with no simple answers.
True.
But by actively engaging with these questions, by remaining curious and adaptable,
Yes.
you can position yourself not just to survive,
Right.
but to thrive in this dynamic market.
I like that.
That's a powerful message to end on.
It is.
So there you have it, our deep dive into the Indian equity market.
A market in transition, brimming with possibilities for those willing to embrace change.
We hope this exploration has sparked your curiosity,
Absolutely.
provided you with valuable insights,
For sure.
and equipped you to navigate this exciting journey.
That's the goal.
Remember, the deep dive doesn't end here.
It doesn't.
Keep learning
Keep questioning.
and keep exploring